If you're buying a house, someone is eventually going to ask you one question. So, what kind of loan are you getting? And for most first-time buyers, or buyers in general, the honest answer is, I have absolutely no idea. Conventional, FHA, VA, USDA, fixed, adjustable, down payment assistance. It all starts feeling like alphabet soup. The problem isn't that these loans are complicated. The problem is that most people only hear about whichever loan their lender happens to recommend. Today, we're going to slow everything down. I'll explain the biggest loan types, who they're generally designed for, the pros, the cons, and why there isn't one best mortgage. There's only the best mortgage for your situation. I'm Dan Winters. I'm a realtor here in the Twin Cities, and let's jump in. Quick disclaimer. One quick note before we begin. I'm not a lender. I'm not licensed to give mortgage advice. And loan guidelines also change all the time. Think of this as an educational overview. Your lender, and we're happy to connect you to some of the best in the business, can tell you exactly what you qualify for. My goal is simply to help you ask better questions before making one of the biggest financial decisions of your life. So let's start with the one you'll probably hear about the most, conventional loans. Now, these aren't backed by the government. Instead, they are loans that meet standards established by Fannie Mae and Freddie Mac. Let's talk about the pros. They often have competitive interest rates. Private mortgage insurance can eventually be removed. You can put down as little as 3% on certain programs. And they also tend to have fewer property restrictions than some government-backed loans. Now the cons, they usually require stronger credit. Higher debt-to-income ratios may make approval harder. And depending on your down payment, monthly mortgage insurance could still be required. Conventional loans are often a great fit, but they aren't automatically the cheapest option for everyone. Let's talk about FHA loans. Now, FHA loans are backed by the Federal Housing Administration. They're incredibly popular with first-time buyers. The pros are there are lower minimum down payments, they're more flexible with their credit requirements, they can help buyers qualify when conventional financing might be difficult. The cons, though, is mortgage insurance can last much longer, and the property has to meet FHA appraisal standards. And sometimes sellers view FHA offers differently in competitive markets, although that varies considerably. And FHA loan isn't a bad loan. For many buyers, it's the reason homeownership becomes possible. Next are VA loans. If you've served in the military, this one deserves your attention. VA loans are available to many eligible veterans, active duty service members, and certain surviving spouses. The pros with a VA loan, potentially no down payment, no monthly mortgage insurance, often competitive with their interest rates, and that combination can dramatically reduce your monthly housing costs. The cons, though, are that not everyone qualifies, and there may be a VA funding fee unless you're exempt from that, and the home still needs to meet appraisal standards. If you're eligible, it is absolutely worth discussing with your lender. Let's talk USDA loans. Now, these tend to surprise people. They're designed for eligible rural and some suburban areas. Yes, parts of Minnesota actually qualify. Now, the pros with USDA loans is potentially zero down payment. They do have competitive rates, and they're helpful for buyers purchasing in qualifying locations. The cons, though, are there aren't income limits that apply to this, the property eligibility matters, and not every suburb qualifies. This is one of those programs many buyers never ask about, even though it could fit their situation. Next are adjustable rate mortgages, or ARMs. These deserve their own conversation. Instead of locking one interest rate forever, the rate adjusts after an initial period. The pros with this are that there are lower starting payments, and they can make sense if you know you'll move relatively soon. The cons, though, are your payments can increase later and most likely will. Future costs become less predictable, and for some buyers, that's perfectly reasonable. But for others, predictability matters more than saving money upfront. Lastly is down payment assistance. Now, this isn't technically a loan type, but buyers ask about it constantly. Some programs provide grants, others provide forgivable loans, and others create a second mortgage. Some are fantastic, others come with long-term trade-offs. This is exactly why I made an entire video explaining how down payment assistance really works. If you're considering one, I'd encourage you to watch that next. So, what really matters? And here's the part I wish more people understood. People spend weeks trying to figure out what is the best loan, but that usually is the wrong question. Instead, ask which loan type fits my goals. Are you trying to minimize your monthly payment, keep cash in savings, buy sooner, avoid mortgage insurance, qualify with your current credit? Those answers matter more than simply picking whichever loan has the lowest interest rate today. So the truth is, good buyers don't choose loans. They choose financial strategies. And sometimes the best loan for one family would be the worst option for another. That's why I always encourage buyers to compare multiple options before making a decision. If you're planning to buy a home anywhere in Minneapolis, St. Paul, or the greater Twin Cities, I'd love to help you understand the buying process from the real estate side while connecting you with lenders who can explain which financing options fit your goals. If you found this video helpful, subscribe for more Twin Cities real estate education. And if you're curious how much money you actually need to buy a house, watch this next video right here. Thanks for watching, and I'll see you in the next one.